G'day folks, Jim here from Orchard Forex. It's Saturday the 20th of June and the markets have just finished in New York a couple of hours ago. It was a choppy but kind of directionless session. Stocks did close a little bit lower. The European indices closed higher, but the the major US indices closed a bit lower, although the Nasdaq once again bucked the trend and that finished about flat. The currency markets saw a bit of a sell-off in the US dollar in early Europe. That took out a few stops, didn't last long, and it quickly reversed. And the US dollar actually finished towards the highs of the day, with the dollar index putting on another 0.25%. And if we go and look at the trend table here, the most noticeable thing to me is that the euro looks heavy on all fronts, and the dollar index looks fairly big. So I think we could see further dollar strength early in the week at least. Dollar yen's not doing an awful lot, that's sitting around, but euro yen, as we pointed out last week, that does feel as though it's heavy and has got further to go on the downside. Sterling does look a bit heavy, but I'm not really sure what's going on there. Brexit's coming back into play, as well as the pandemic in the UK, which has been completely mishandled by the government. And the commodity currencies, they look fairly heavy, but they pretty much, the Aussie particularly, finished pretty much where it started the week. So we'll have a look at those. As far as the commodities go, it's gold market looks a little bit big. It did put on $25 on Friday, where I think they might have a little bit more follow through, but the longer term looks a bit uncertain. And oil, well, that did test the top side, got up towards our resistance, as I'll show you in a minute. But so far it's failing in the 40 to 43 area, and it had a spike lower before recovering to finish just under 40. As far as the crosses go, there's not, apart from euro yen, there's not an awful lot I can see. I did buy a bit of sterling Aussie below 180 on Friday in New York, but I've got rid of that towards the close. I didn't really want to run it over the weekend. Anyway, we'll go and have a look at the charts and see what they've got to say. Okay, so if we start off with the euro, as you can see, we had that nasty spike up to 112.5 on Friday. The 100-hour moving average capped it, and it didn't stay there very long at all. And from then on, the US dollar strength and the euro remained under a bit of pressure, and we're still sitting above this neckline. I don't know whether this is going to turn into a head and shoulders and move down towards 110. I kind of still like US dollar strength, but it does seem to be it's going to be a sort of slow move if we do see it. The hourlies do point lower. The 4 hourlies are pretty negative, and as you can see there, not only are we sitting on the neckline if this is a head and shoulders, we're also sitting on FIBO support there. So as long as that holds, we may just chop around here on Monday. There's not an awful lot on the calendar on Monday. In fact, there's very little. Although the Booba do their monthly report, but that's really about it. And there's some minor detail out of the States. I think it's just the Chicago Fed National Activity Index and the US existing home sales. But if we can break down through this 111.70, as I said last week, then I think we're probably heading towards 111, and potentially the measured target here. This could take us down towards 110, which will be very good support down there. But at the moment, momentum does seem to be headed that way. The 4 hourlies are flat, but really I'm basing most of my views on the way the daily charts look. So stay short the euro and long dollars, and I think now probably keep a stop loss, probably 50 points away, call it 111.25 or more. 111.55.60 would probably be a better place, just above this high here, but that's now becoming some way off. Dollar yen, as I've said before, that's really doing nothing here, so I'd leave that alone. But euro yen we'll have a look at in a minute. Sterling has broken down through the wedge that we spoke about last week, and it does feel heavy. There is support here, so where's that, 123 and a change, but below there we've got these lows down here, and I suspect we could head down. I don't know, we're 123.5. I'd look for 123 first, and then make up my mind from there. The dailies have got minor downward momentum, but I think that there's probably easier trades around than sterling at the moment. Dollar Swiss will leave alone. The Aussie finished the week pretty much where it started, to be honest. This support level up here, the Aussie's doing its best to break it, and we did finish just below it. But having said that, we did get up to 69.10 or so in Europe when the euro went high. The Aussie went up to 69.10. But it's come back down. I still think we're going for a test of 67.70 at some stage down around here. But it looks like it's going to be a pretty slow move if we see it at all. The 4-hour charts are telling us very little. But as with the euro, the dailies do look heavy. I wouldn't put too much into the Aussie at the moment. If we look at the Ichimoku charts, the Aussie really just formed a doji over the course of the week, basically opening and closing at pretty much the same level. But interestingly, we are back below. We did make a close below the cloud. We attempted to make a couple of weeks of move above the cloud. Never made a close there. Closed within the cloud last week, and then below the cloud this week. So I wonder if that may signal a bit of bearish movement in the days ahead. Just have a look at the dailies. Yeah, it's not telling us an awful lot. The Tenkan up here would offer some resistance now. So 69.20. I don't think we're going back up there, and I think we're probably heading down towards the sort of Kijun here. Well, that's 67.30. As I say, the support is at 67.70 before then. The Kiwi is pretty much the same boat as the Aussie, although that's trying to hold on to its own level of support here. It's just above 64. If we break that support, we're going to find 60, sort of 63, 10, 15 level will be the next level to look out for. That's a 4-hourly chart. The dailies 63.15. That's the 200-day moving average. So that's a level to watch for. I think we're probably going there. The dailies do look pretty negative. Having said that, the weeklies remain positive. So while I think we might be headed lower in the next couple of days, I don't think it's a one-way bet. And progress are like to be somewhat slow, I think. On the crosses, we'll just go and have a quick look at the crosses. Here we are. The only cross I really like is this euro yen. Now, it did. We spoke about this level last week, 119.40. We've come to sit right on it. 4-hour charts look heavy. The dailies look heavy, and the hourlies seem to be pointing a bit lower. So I think we might see a bit of downside pressure early in the week. If we can break this 119.40, and that's going to be pretty decent support, I think. But if we can break it, we're looking down to sort of 119 or so, just under perhaps, and then back down to the 61.8% FIBO level, around just above 118. Moving the 200-day moving average just here is also creating support for the cross. At 118.70 actually is probably the next level we should be looking out for. That's the 100-day moving average. I don't know where the weeklies are. No, we're below the weeklies now, so they'd act as resistance in case of a rally, but I don't think we're going up there. So that's about it. Sterling Aussie is interesting. I did buy some Sterling Aussie on Friday on that break below 118, and it did rally a big figure off that. But the charts still look heavy. That's a 4-hourlies. The dailies also, the dailies may be turning lower, and the weeklies also look pretty heavy. So I'm not sure I'd place too much faith in being long sterling Aussie. It looks to me, if anything, the weeklies look as though we're headed for a test of the 200-week moving average, which is down here around just below 178. So that may be something to look out for. As far as the stock markets go, here's a chart of the S&P, a 4-hour chart, and it's been fairly choppy in the last few days. It did finish on a weak note though, kind of as we thought it might, and I suspect we might have a bit more of the same ahead of us. Although having said that, 4-hourly charts are pretty flat. But the dailies suggest that we might be in for a test of lower levels, so run towards 3,000. And well, what do we got here? The 200-day moving average is at 30.18. We then got some FIBO support down here, and the 100-day moving average down at 29.25. So the dailies do look heavy, but the weeklies still look relatively positive. So I think we're probably going to be in for further choppy trade, as we said last week. But I do think for the next couple of days, the BART is probably slightly lower. I think really the same applies to the ASX. Let's have a look at that. That's trying to hold on to some support around this level here. Where is this? 5800, 5760 is the FIBO level to watch. But once again, you know, the indicators are flat. The dailies are pointing a bit lower. So I think we might, you know, we've got this rising trend support here. We've got the 100-day moving average there. I think progress is going to be slow. I think the market's going to remain fairly choppy, driven by coronavirus headlines, I think. And there's not an awful lot of data out this week. The major event coming from the States is going to be on Thursday when we get the durable goods orders and the first quarter GDP and personal consumption and expenditure figures, as well as the weekly jobless claims, of course, which are now very important. But I think further choppy trade with a downside bias looks the way to go. Gold had an interesting move. That put on sort of $20 odd on Friday. The short-term charts do look slightly positive, if anything. I kind of like the idea that gold might actually go a little bit higher. This level here, 1765, that's going to be very important, because if we get there, because that takes us back, that's a high since 2012, so we need to go and look at the weekly charts for that. So that's the previous high. We're here now, 1740. These are this high here, 1779 by the looks of it. Is that right? 1795, I beg your pardon. I don't think we're heading there yet. It looks to me, gold does appear choppy, but I wonder if we are building for the next run higher, take out this level, possibly make a new high and then dip back again. But as I say, the 1 hour, the 4 hour, possibly even daily charts are beginning to look slightly more positive. So it's worth keeping an eye on gold. I don't like to trade it too much. It does get very choppy, and it's there's easier things out there to do, I think. Lastly, we'll have a quick look at oil for the week. Now, oil did make a new high. It got up to 40.57 before we saw a pretty sharp collapse, actually. I need to go back to the 15-minute chart. So it got up to 40.57, collapsed all the way down to 38.50, and then regained half of those gains. I'm not really quite sure why that collapse happened like that. I think probably triggered some stops on the top side, and then new sellers came in. I don't really know. But the hourly charts, they look slightly negative. The 4 hour charts not telling us an awful lot, and the dailies also look slightly negative, but the weeklies do look very positive. My own view is that we're going to still continue to chop around here, so trade the range. As I've said to you before, well, we need to stay above 33 really, but I'd now like to probably bring that up to about 35. I think we are going to have another look at this 40 to 43 area. I'd probably be looking to lock in some profits if we get there and re-establish the long position at lower levels. I prefer to trade it from the long side and the short side, but you need to play your cards fairly carefully, because as we saw on Friday, the dips can be very swift and quite deep. But yeah, keep stop losses now below 35, certainly below 33, because I think, as I've said before, we are heading eventually towards 50-55, but yeah, it's a long way off at this stage. Anyway, that's about it for a weekly outlook. I'll leave it there, and I'll do a daily video as and when we see fit. Cheers. Talk to you later.